Hello everyone, welcome to Yadnya Investment Academy. Today we will talk about the GST. I'm sure you all must have read the news that Rajya Sabha has passed the GST bill almost unanimously. This bill is being touted as one of the biggest reforms in India after 1991 financial reforms. So, what is exactly GST bill and how does it impact us? Before moving to that, we will first understand what is GST bill. GST means goods and services tax, which means a tax which applies uniformly to goods and services, and also it's a uniform tax across India. To understand GST better, we need to understand our present taxation system. Tax structure in India is basically divided into two broad categories: direct taxes, indirect taxes. So, direct taxes are basically the taxes which are taken directly from the individuals. So, income tax, corporate tax are direct taxes. Indirect taxes are paid by the intermediaries on behalf of the final consumer. Indirect taxes are collected by both central and state governments. Central government collects majorly three types of indirect taxes: excise tax, service tax, and customs. Excise tax is the tax on production and manufacturing of goods, obviously applied by central government. Similarly, service tax is the tax which is on services provided or to be provided by the vendor. And custom is the tax on international trade. Moving on to state level taxes, VAT or sales tax is applied on goods distributed within state. VAT is a value added tax. We will discuss in detail about value added tax in our later videos. Central sales tax is applied on goods movement from one state to another. Similarly, entertainment tax, octroi, luxury, or all other taxes which state levies. Now, GST rationalizes this whole bucket of indirect taxes. Ideally, GST is a one tax regime, but India is going for a dual GST, which means there will be two separate taxes. One will be the central GST, the second will be the state GST. And all other heads like excise, service tax, central sales VAT, entertainment, all these taxes will be replaced by the GST. There are still few heads which are not in the GST purview, like customs, petroleum products, tax on liquor, stamp duty, or tax on electricity. To understand this better, let's take an example. We already know the central excise is applied on the manufacture of the product, and VAT or sales tax is applied on the distribution of the product. So here the good is supposed at 100 rupees and the central excise is at 10%, which makes it at 110. Now VAT is applied on that 110 at 14%, which comes out at 15.4, which basically takes tax to 25.4, and our product becomes from 100 to 125.40. Now with GST, both central and state GST is applied on the supply side of the product, not on the manufacturing. So if we take central GST at 10%, which is same as central excise we have taken in above example, it comes out rupees 10, and state GST at 14, which is at same percentage as VAT above, it comes out at 14. So it comes at 24 rupees. So your product pricing now becomes 124 rupees 00. So basically you can see the benefit. There is no tax on tax in GST. So in this video, what we have learned is our current tax system. What is GST, what are indirect taxes, and how GST is replacing our current tax system, majorly indirect taxes. And in future videos on this topic, we will have more details about the features of the GST bill, what are the advantages, what are the disadvantages for us, and what is the roadmap ahead for that bill. Thank you so much for watching this video. Goodbye.